Hooty hoo, all my stock market gamblers. Welcome today. I'm Tom Mike. I'm so glad you're here. What do we got going on? Well, we got a stock market that only goes up, right? I mean, they're going to push this higher. I'm telling you, they're going to print the money. That Donald wants interest rates lowered to 1%. Money's not tight now, but we're going to really loosen up the money. You see, people think money's tight. Money's not tight. Money is flowing everywhere, flowing into the stock market, keeping real estate prices up, flowing into Bitcoin. Everything's at a record high. Look at gold. Gold makes a new record high every day. But here's the thing. Here's the thing I want to talk a little bit about. Is a record. Well, it's a record, right? It's over $1 trillion now. $1 trillion in margin debt. Now, this is mostly retail investors, right? I mean, they're making money, so they borrow more money to gamble in the stock market to make more money. As long as the stock market keeps going up, well, margin debt's great, right? I mean, people are getting filthy rich using margin debt. Now, margin debt, it's like, okay, like you put $100 in, you can trade 200, 300. Some firms let you trade $400 or $500. So it can be like 5 to 1 just on regular margin debt. And then you got derivatives on top of derivatives on top of derivatives. But margin debt has hit a new record. We're over $1 trillion in margin debt for the first time. Now you have to be careful with margin debt. A lot of novice players, they think the market can only go up, and they say, well, if it starts to go down, I'll get out. I got news for you. When it starts to go down, it can trigger the circuit breakers and lock you in till the next day where the trigger again on the open, the circuit breakers get triggered. You can't get out. And then it happens again and again. All of a sudden, you're down 40, 50% before you even know what hit you. Now, when you're on margin debt trading 5 to 1, well, you wiped out your whole account. Your account's gone, but don't worry because you lost more money than you have in your account. So now they're going to come after your assets. And one of those assets they come after is your house. In the last financial crisis, some people lost their houses because the stock market went down. They were on margin and the brokerage firm came and took their house away. You have to be careful. You have to be responsible. If you're gambling out there, you're winning right now. And that's great, but just be careful with margin debt. It's a new record, and this is mostly retail investors, and they're just not familiar with any downturn in the marketplace because they've only seen it go up for the last 16 to 18 years, straight up, straight up, straight up. And since markets only go up, what could possibly go wrong? Well, there's going to be a few things that can go wrong. I'm going to explain them here. Okay, so we have, this wasn't really news. The mainstream media doesn't pick this up, but Morgan Stanley, a major investment bank, let's call them Morgan Stanley, they came out with their announcement, right? Now, their announcement says for the last 50 years, right, they have clients that they invest for, and these clients that they invest for, they keep them in a 60-40 portfolio, right? 60% stocks, 40% bonds. And this has worked great for the last 50 years. Not so well in the last 5 years, but over 50 years, they haven't changed that philosophy. 60% stocks, 40% bonds. Well, they came out this past week and they said, hey, we're going to change it up. We don't want our clients 60% stocks, 40% bonds anymore. No. We want 60% stocks, 20% bonds, and 20% gold. 20% gold. Most investors don't even have 1% gold, but now Morgan Stanley's coming out saying they want you to have 20% gold. That's not where the story is. The story is they want you to sell your bonds so that you can buy the gold. So you're going to have people dumping out of the bond market, right? Now, especially if other firms pick up on this. This is just Morgan Stanley. What if Goldman Sachs does it? What if JP Morgan does it? What if this all becomes standard recommendation for the financial world? 60, 20, 20. What's gold going to do? Well, you see what it's doing, right? It's going up every day. If you own gold, it's like Christmas every day. Every day, it's a new record high, new record high, new record high. Now, we'll probably get a pullback here. Believe me, we're overbought. Nothing goes straight up, and we're due for a correction. We're due for a pullback. I think the pullback will be small. small. I think it'll be minor. Maybe we get a couple $100 pullback before we go right back up to new record highs in a day. I mean, it's getting a little volatile, moving $50 a day. That's getting volatile. Soon we're going to be moving $100 a day. Be wild if we get to moving $1,000 a day. My eyes get real big. My miners start going up and up and up. Look at the miners are overbought also, and they're probably going to have a pullback along with gold. So once again, I think these pullbacks are going to be minor. Don't get shaken out. Sure, if you got a little bit of profit, take a little bit off. Don't take the whole thing off. You got 100% of it in there. Maybe you pull 10% off to get some dry powder just in case there's more opportunities down the road. But this is a problem right now because it's a problem for the bond market. Now, here's the thing. Nobody wants our bonds. Nobody wants the dollar anymore. What do they want? They want gold, and you can understand why. It's making new record highs every day. I want more gold, right? I mean, I don't have enough. You never have enough of the things that are going up. You always have too much of the things that are coming down, right? But you never have enough of the things that go up every day. So I'd like to get some more gold also, but I don't have that much dry powder. I'm pretty much fully invested in gold, in silver, in the miners. I'm not in the stock market. I don't think it's a safe place to be. I don't trust it here. I know it's making new record highs, right along with gold, and new record high, but it's only up, 12% for the year, where gold and silver are up 40%. The miners are up 100, 110, 120%. GDXJ, I mean, they just keep going. They are getting overextended here, probably going to get a little bit of a pullback, which will be an opportunity to get some more. But we're going to talk about the problem with the bond market now. Now, they lowered rates, right? And you saw the long end of the curve going up. You saw the mortgage rates going up. That's not good, right? It's not good for the real estate market, not good for the housing market. This is going to be a problem. Realtors are going to be starving, and your house is going to be going down. But no one wants to buy the long-term bonds. No one wants to buy the 10-year, the 20-year, the 30-year. Now, I bless anything under 1 year and less. Those are just where you keep your dry powder, right? I mean, you get your money back, get a little bit more interest, and you're going to be fine. So I bless 1 year or less. Even you go out to 2 years if you want to get really aggressive. But these people buying 10, 20, and 30 year, well, first of all, no one's buying them, but they'd be crazy to buy them right now, right? Who is buying these? Well, here's the thing. The Treasury just bought back just this year $150 billion of long end bonds. Now, that sounds really cool, right? We got this extra money and we're paying down our debt. No, not at all. It doesn't work that way. The Treasury doesn't have any money. The Treasury should be the office of the debt. All we have is debt. So how do they buy the long-term bonds? They issue more debt. What are they issuing the debt at on the short end? The 3-month, the 6-month, the 1 year. They're issuing those, and they're buying back the long ones, because otherwise that long end, you would see your mortgage rates already over 10% if we didn't have that government intervention, right? Government has to step in and buy the long end of the market. No one's buying that. And they don't want to see that long end skyrocketing up, because that's going to just crush the housing market when it happens. And it's going to happen. I mean, it's going to happen relatively soon. Now, a lot of people, okay, here's how I see it playing out. Now, your take's probably completely different. Everybody's excited about the big run-up in gold, right? I mean, everybody's going, I'm going to sell when it gets to 4,000. I'm going to sell when it gets to 5,000. No, you don't want to be a seller here. This is not the main event. This is not the main event at all. The system's going to go down. When you sell, what are you going into? You're going back into dollars. No, don't do it. Stay with the gold. Stay with the silver. Stay with real money. Stay out of their system. Their system's failing. They know it. It's going to go away. Look at throughout history. Just look back on history. Any fiat currency has always gone to zero. Every single one. Over 4,000 of them throughout the course of history have gone to zero. Our fiat dollar will go to zero, right? It's lost 99% of the purchasing power already just since we went off the gold standard in 71. We talked about all that in the last video. But they're coming after that last 1%. And it's not going to take them 50 years to wipe it out. I don't think it's going to take them 5 years. I don't think it's going to take them 3 years. They're going to keep the printing press going. They're going to cut rates to zero. But here's the thing. You see the long ends going up. No buyers. They have to come in and buy it. They're the only one that buys it, but they don't have any money to buy it. So they're selling the short end so that they can come in and buy the long end, right? Says otherwise the mortgage rates explode and the housing market starts to crash. Big time, not little time, big time, right? But okay, so here's my take on how this will play out. You see, this isn't the big move in gold yet. No. This isn't the revaluation. No. This is our government being desperate. They're in there buying. I believe they're buying hand over fist, right? They're in there buying with both hands as much as they can get. They got to fill up that Fort Knox thing again before the people come with the pitchforks. We don't have any gold except for what we've been buying this year and last year. I think they started buying this year and last year. That's why you see it going like this, right? It's almost like a hockey stick, gold just straight up. Other central banks around the world are buying just as much as they can. Everybody knows the game's over for the dollar. Everybody wants to get out of the dollar. Everybody wants to get out of our debt. They're trying to save it, right? Trying to save it with the stable coin market. I'm telling you, stable coins is not the answer. It's not going to save it. All the crypto, you're going to have a lot of people heartbroken in the Bitcoin, in the Ethereum. There's going to be a lot of people heartbroken. Even the people in the Dogecoin and the fart coin, they're going to be heartbroken also. Look at gold is where it's at. Gold is God's money. Gold is what will be surviving when it all comes tumbling down. So all that other stuff is fake. All that other stuff is fiat. Gold is real. You want to get some of that. But how do I see this playing out? Okay, I see it coming down, right? I see the stock market falling. I see the real estate market falling. What are they going to be doing? What's the Federal Reserve going to do as soon as the market starts to fall, as soon as the houses start to go down? What are they going to do? It's a no-brainer, right? They're going to print as much money. I'm not talking about $2 trillion a year. I'm not talking about $5 trillion a year. I'm talking about 10, 20, 30 trillion dollars a year. And then you're going to see the hyperinflation coming. This is where the end game is for the gold market. Don't you be selling your gold just because it hits 4,000, 5,000, 6,000. No, you hold on to that. Yes, if you have to sell it, I get that. There's some living expense. Don't sell all of it. Just take a piece of it and bring it down to the coin shop, get some money, pay your bills. But hold on to it as long as you can because that's real. That's the only thing that you're going to be left holding. All the other stuff's going to be wiped out. Yes, we're up 12% in the stock market. The risk is so extreme here. I keep telling you, gold will go 1-to-1 with the Dow. Dow's over 46,000, record high. Where's gold? 3,700. Look at, they're going to go 1-to-1. That's a 10-bagger. Will the Dow come down to 3,700? Will gold shoot up to 46,000? Will they both meet at 100,000? I have no idea. I just know that we're going to get the deflation coming. Then they're going to crank the printing press. And then we're going to get the hyperinflation coming. And then they're going to have to reset the currency, right? There's going to be a gold revaluation. First one's going to be 10,000. Do not trade your gold in at that point. Do not. They sucker you in. They're not going to confiscate. They're going to make you trade it in at 10,000. They go, oh, we'll pay you 10,000, but it's only worth 3,700. Yeah, we'll give you 10,000. Hurry up and rush down here. We'll buy all the gold you got. And people will turn it in, right? So they'll have some $10,000 gold sitting in Fort Knox, and they're going to revalue it to 20,000. More people will rush down, turn it in, so they'll have some 10,000 gold, 20,000 gold. They'll do it at 30,000. They might do it at 40 and 50,000. Just depends on how things play out. But to get confidence back into the system, they're going to have to get gold back into the system. It's not Bitcoin that's going to get the confidence back. People do not have confidence in Bitcoin. I'm sorry. Michael Saylor, he'll tell you got confidence in. He'll tell you it's guaranteed to go to $30 million for a few digits on the screen. Really, Michael? Are you that big of a con man? That big of a snake oil salesman? I don't know. Maybe he's right. Maybe I've got it all wrong. Maybe Tall Mike's the idiot. Maybe Tall Mike has this backwards. I don't think so. I'll take my chances on God's money, gold and silver, baby. I'm going down to the coin shop to get some more on any dip. You see a dip, you run to your local coin shop. You push the button on on the online sites, the reputable ones. Be careful. There's fakes out there, people trying to hustle people with fake silver. Not so much in the gold, but there's fake gold too. You got to be careful everywhere. Costco, you can buy it at Costco if you want. They're pretty reputable. They won't buy it back from you, but it's a good place to stock some up, right? They never have it in stock when I go. They're always out of the silver. Every now and then they have a few gold bars left. But I'm telling you, you want to get some of this stuff. The world has changed, and all this fiat, all the stock market stuff, all this fake stuff, it's going away. You're going to be left holding the gold. You're going to be left holding the silver. That's just my take. I know yours is probably completely different. That's perfectly fine. Anyways, if you like this stuff, give me the thumbs up. Punch that subscribe button. Get out there, everybody. Have a great day. Bye-bye now.